if you look at all the metrics of Bitcoin, it follows this network type adoption of power. This trend is extremely strong. It's been the same since 2016. So it's not exponential. You know, the stock market is exponential, but cities don't grow like that. Cities actually grow in power, and networks tend to grow in power as well. The growth is more explosive than you can realize. It's just you're impatient for that face-ripping exponential blow off top.
Zoom all the way over to
Imagine.
the right. Let's just give people the price prediction. I want to see it all the way to the right.
All right. So 2025, 125K. Let's go out. My daughter just got home from school, but she'll be all right.
Well, it's a Friday afternoon in Latvia. Children are coming home from school. It's the weekend. We've got an executive order in the United States officially signed designating Bitcoin as a strategic reserve asset of the United States federal government. Very fitting morning to be speaking with you, Mr. Mezinskis.
Because of the executive order?
I don't know. Yeah, you gotta
congratulations, Marty.
Yeah.
I always enjoy these quarterly chats, mostly to come on and talk about my love for Bitcoin and also my love for Ukraine and lose you a few subscribers in the process.
People love it. It's
Do they? Do they love Ukraine?
It is split down the middle. I don't know if you read the comment section.
I think it's disproportionately unlove in Bitcoin land, or just in general center right, or not even center. Let's say more right leaning politics. But we can talk about some things. Obviously, it's been crazy, a little bit disturbing for us in Eastern Europe. The world order is. I think we're watching history right now. I think it's being redrawn, the maps and the spheres of influence, and we'll see how that goes. But Bitcoin is obviously the focus for when we chat, so we can start there, or whatever. You're the host. You tell me.
Let's start with Bitcoin, and we'll get to it because I've got some thoughts too about Europe generally, not even Ukraine, Russia.
Besides taking holidays there and nice wine, I assume you are glad that they're spending more on defense, which I am as well.
Yeah, I am on that, but also they're completely. Maybe we're going to start with it. Fuck it.
No. Let's table it. Let's table it.
Okay, let's table it.
Let's table it.
The strategic Bitcoin reserve, significant in your mind? Insignificant?
Yeah, it's definitely significant, legitimizing and setting the table for other nations to do the same. You and I, this is no surprise. Obviously, everybody knew he was going to do something, but to have the strategic Bitcoin reserve and the sovereign wealth fund, which is a good idea, by the way. For those that don't know, Social Security is not a sovereign wealth fund. It is a more or less legitimized Ponzi. That's been running cash flow negative since 2011. But regardless, having the United States has a lot of debt, as people know, $37 trillion worth of debt. The states that typically have sovereign wealth funds have no debt, low debt, and extremely high liquidity, high income producing assets. Usually from oil, right? So the Saudis, the Emirates, and of course the Norwegians, the most famous with the sovereign wealth fund.
Alaska.
So, yeah. So state funds as well. Of course, the United States has states that have in their pension funds, in the state pension fund system. Those are sovereign wealth funds within the state level. So yeah, I think it's totally good to do. And I know that we're talking about the strategic Bitcoin reserve, which is different than the sovereign wealth fund. The fact that there are two hanging out there, basically, where Bitcoin is going to be a part of, is, I think, pretty fantastic for Bitcoin, for adoption, and no one is going to argue with those points. Of course, the people that think, it's just for criminals and money laundering, which they've been saying that for as long as it's been around, they're always going to continue to say that. But as we know, this is better than gold. And it's legitimizing what we've been saying for, you and I since we've been publicly talking about it.
And I think equally as importantly, the executive order successfully de-alienated between Bitcoin and broader crypto, which I think was very important.
Did they?
Yes.
Did they?
Were you
getting worried? Were you getting worried?
I mean, did you see the tweet on Sunday? The Truth Social post?
No, to be honest, I haven't. I think Sachs is a joker, and I don't respect him at all for a lot of things. But his, as Boris Johnson said, his sort of bro-ish love for Putin. You know, we're not going to go there yet, but it is very disturbing to me, and I don't respect him at all. And it's not. Everybody knows that these jokers from the All In podcast and the Silicon Valley people with their shitcoins, they are specifically of the Sol variety. They are trying to cash out as America is supposedly cashing in to crypto. So that didn't surprise me, last week with those announcements of those coins coming in. And I think that people should pay attention to that. Like that's part of the picture. It's fine that there are statements made and new sort of signals sent that Bitcoin is different, but you still got to understand what we're dealing with here. And
agreed.
There are plenty of jokers.
It was codified in the executive order, though. It's like Bitcoin is this digital reserve asset, this digital gold, if you will. It is separate. It is distributed. And then all this other... I think the way I understand it, less than 24 hours post-executive order. Been very busy. Haven't had time to sit down and read through it all. But the parts that I have seen, basically Bitcoin is one thing, and we're going to basically take all the
accumulate.
Bitcoin. Start with the Bitcoin that we already have and say we're not selling it anymore. And Sachs and Lutnick have the ability to accumulate more Bitcoin as long as it's not a net cost for taxpayers.
Budget neutral, yeah.
And then they put Ripple, Solana, ETH, all the crap in another bucket and said, we're not going to buy more of this, but we're going to basically convert what we've seized into the reserve as well, separate from Bitcoin, though. That's a question, too. I think they owe Bitfinex some Bitcoin back. So I think like half the reserve technically is Bitfinex's Bitcoin.
Well, it's very likely that there's some shenanigans there with Tether as well, still to this day. The assets on Tether's balance sheet have to do with Bitfinex loans.
What do you mean there? Loans? From
the original hack. Or did they actually pay that back? They might have paid it back officially. I can't remember.
Because they had Leo.
But you never know with the Tether balance sheet still, right? The quality of the Tether assets are not just sovereign U.S. treasuries owned by whichever entity it's now domiciled in for Tether. I think now it might be going into El Salvador. Mm-hmm. I haven't paid so much attention to this for the listener at the recent weeks, but regardless, it's still far from clear, as far as I know, the actual quality of the reserves. So you can have, I can give you a loan, you can give a loan to someone else. We can all have a loan granted that's an asset, but the quality of that asset is important to understand, right? So that's why gold is nice, because it's just, when you hold it, it's an asset that you understand. That's why Bitcoin is nice. When you hold it, it's an asset you can understand. And that is actually why treasuries are nice. That's why it has been in the past, because treasuries, even though the debtor is the United States government, which traditionally has had a pretty strong credit. Obviously, things could be changing now, but still, I think the United States is the best looking horse in the glue factory, as I've often said. The treasury bond was a great form of collateral for worldwide finance for 50 years. So the point is, Tether's balance sheet still, I'm not sure if that's been proven that it's like, the actual tethers that are issued are one-to-one with U.S. government bonds. I'm not saying it's so important. I'm not at all saying that this is like a big problem. And obviously with Lutnick's position, he set himself up in that enterprise to be in just a fine place, right, for the next
Yeah.
few years.
I think
But the point is,
I think you're misunderstanding what I was saying, though. Like, the U.S. government recovered 94,000 Bitcoin from the 2016 Bitfinex hack. Remember Razzle-Khan, the best rapper in the world, that chick and her boyfriend?
right?
And so literally like
The
half
NYC
the reserve,
sting
half the
operation.
reserve is
From
Bitcoin from that hack that was recovered by the U.S. government that I think technically should be given back to Bitfinex.
I see. No, I was talking about something completely different. I was talking about
Yeah.
prior Bitfinex hacks with Tether that were supposedly papered over. Yeah, that's a whole different thing. Yeah, so you're talking about the actual, like, their account with Bitfinex when the Bitcoins that they had in Bitfinex, those two.
Well, they stole in 2016. Like they were the ones who basically hacked Tether or Bitfinex for 116,000 Bitcoin, and then
Right.
2 years
I
ago,
got
the
you
U.S.
now.
government found them and recovered 94,000 of that
Yeah, that's
116 that was stolen.
that's
And
actually a
that's
good point.
what now sits in the strategic reserve in the U.S.
What percentage? What percentage of the strategic reserve
It's
is
like
it?
50%.
Yeah, that's a problem. And they're going to keep it there.
I don't know. I've been saying they
Well,
should
again,
get it back.
This shows who we're dealing with here, and this is why caveat emptor: withdraw your coins. There are real world. Speaking of not getting hacked, but OPSEC and security. I say this often on shows that I'm on in my own show, and again, we're not going to jump here yet. But with the uncertainty in the world, even in Eastern Europe at the moment, it is coming down to what we've talked about for years. Like, I need to be in the position, and I am, thankfully, because of Bitcoin, in the position that I can literally walk across the border if something happens in Eastern Europe, and we would have to flee. That, of course, it's never good to divulge all your security, but I've said many times that multi-sig in multi-jurisdiction, even if you're comfortable as well, if you're worried about some $5 wrench, or if you're worried about someone that's been stalking you, it might even be a good idea to have some keys in a place where you would have to even do some KYC, like a bank, or at least you would have to have a key for safe deposit box. If you have multi-sig, if you're in multi-jurisdiction, if you're backed up in multiple places, all those things are on the table. And you have to do it that way, in my opinion. Obviously, we've been talking about this for many years, but the world is, I think a lot of people are getting a little bit of a false sense of security with this. And just, that's a perfect example that you just said of where, it's not your keys, not your coins. If you log into Coinbase, if you log into Kraken, and you think that you have those Bitcoins, all you have is a claim on those Bitcoins. It's the exact same thing as a bank account. So anyway, that's a typical soapbox tirade that probably every listener of this show understands, but never hurts saying it again.
Hey, there's a lot of new people coming to Bitcoin. There's some people hearing this for the first time. This is a very popular show. People, they hear from their friends. They go to swing dancing classes like Logan did last night, and they meet people, listen to the show.
Well, like I said, what you can get me, the only Ukraine supporter, on, and then I can cost you a few of these subscribers. So I'm happy to do that.
Yeah, we are well-rounded, all sides heard show.
I like that, Marty. I like it, my friend. You want me to show you some charts?
We can look at charts. Yeah, I think digging back to the strategic reserve, like maybe stepping back from the strategic reserve, looking where Bitcoin is now. We're at the end of the year. I guess we're a little bit below where we ended Q4 2024 right now.
As far as a size of the monetary base?
Yes.
And Bitcoin's relation to it?
Yeah. Wearing the Silk Road hat today, just to remind people. Make sure that you're thinking about P2P Bitcoin, building on what Matthew just said. Get your Bitcoin off the exchange. Set up your security right. Multi-sig preferable. And particularly with the strategic reserve, if you read, I mean, pros and cons, pros, Bitcoin separated, they're holding it, Bitcoin validated. Con, the main avenue for acquiring Bitcoin in the strategic reserve is asset seizure. So much easier to go to exchange and say, hey, I don't like that person, give me their Bitcoin. We're going to put it in the reserve. As opposed to having to go door to door and get you to unearth your keys and sign a transaction, sending it to the strategic reserve. Do I think that's going to happen right out of the gate? No, but there are technicalities in the law that you should be aware of.
Well, what do you think regarding, the little tangent that I went on, people actually holding real Bitcoin and then people continuing to hold Bitcoin in, Revolut or their broker accounts? Obviously, I'm sure you have this discussion often with guests. This is not going away. If we look at the gold industry, for example, it's a sizable portion of the gold market that is in, tradable, transparent ETFs. How do you think that the Bitcoin self-custody versus custodied breakdown continues with this?
Right now it's about 50-50, right? 50.
How are you defining 50-50?
50 in self-custody, 50.
You mean from like a Bitcoin treasuries sort of
No, just in the free-floating supply. I think River just released a report. I
haven't seen the latest of that, but yeah.
I believe that's what they said. 50% of Bitcoin that's been dispersed to market is in self-custody and 50% is in ETFs on exchanges, blah, blah, blah.
Miners. You count miners as being a custody, obviously. So on and so forth, yeah.
I think UX needs to improve, and I think it is improving. I think products like Bitkey, disclaimer, sponsor of the show, are a great exploration of the design space of Bitcoin self-custody that makes it easier and at the very least enables people to interact with a somewhat easy to use and straightforward product to begin their journey to more secure, or maybe not more secure, more private, multi-sig. It's probably the way to put that. There is some privacy trade-offs with the Bitkey because Block holds a key with their servers so they can see how much Bitcoin you have, what addresses it is in, but is still self-sovereign. It's a 2 or 3 multi-sig, and you hold 2 of the keys, one on your mobile app and one on the hardware device, obviously. So I'm positive. And Parker Lewis and I recorded earlier this week, and we were just talking about the flow here at TFTC. On the business side for our Bitcoin treasury, we send invoices out. We accept Bitcoin on chain, beginning to accept it over the Lightning Network as well. I have an exchange account for the business, and I'll let that build up to a certain amount, and I use that to pay contractors and other invoices. But then I also have multi-sig cold storage, where if the exchange account gets too big, I sweep it into cold storage. And so, personally, I guess I'm playing in both worlds, but strategically and mindfully of how much Bitcoin is where at any given point in time. And I think I'm pretty confident that P2P usage of Bitcoin as a payments network is going to increase pretty significantly in the coming years. I'm already seeing it. That's what Parker and I were discussing. I've received just in the last week alone 4 or 5 invoices from Zaprite that enable me to pay for goods and services necessary to run this business in fiat or Bitcoin, and I've been trending towards paying in Bitcoin. So yeah, I think I'm going to be optimistic. I think UX is getting better. A lot of work to do. So I wrote a newsletter this morning, or I read it last night, published this morning, saying strategic reserve, big moment, obviously, a lot of gravity. A lot of validation for Bitcoin, but don't get complacent. Everybody's saying we won. We haven't won yet. There's a lot of work to do to ensure that people can use Bitcoin in a self-sovereign fashion. Not that they can't today, but it could certainly be easier and more intuitive for people, especially as adoption waves continue to hit the shores here.
Well said. I can't add too much to that, and I think that, like I said, everybody's got their own security needs, but I can tell you for me, having the ability to be fully in control, no matter who's in the White House, no matter how safe your family might be, is actually really important, and it might surprise some people. Being a American, Latvian, white European, but yeah, it's a dangerous world right now, and I do think that people really, really need to think about security because things aren't necessarily going to get any better, in my opinion.
What's up, freaks? Do you have a credit card? Are you getting cash back or airline points or points for some other service? Guess what? Those are shit coins. You want to be stacking Bitcoin. And I have some groundbreaking news for you. The team at Fold has finally released the Bitcoin Rewards credit card. They have a wait list. They're going to be distributing the cards later this year. So you want to get on the wait list. Fold Plus members are going to get unlimited 2% Bitcoin back on this credit card. If you get on the wait list, they're up to $200,000 in prizes they're going to be giving out. So get on it as quickly as possible. Go to tftc.io/fold and get on the wait list there. If you're on the wait list, you have the potential to win some of the prizes. Check it out.
Sup, freaks? This rip of TFTC was brought to you by our good friends at Bitkey. Bitkey makes Bitcoin easy to use and hard to lose. It is a hardware wallet that natively embeds into a 2 or 3 multi-sig. You have one key on the hardware wallet, one key on your mobile device, and Block stores a key in the cloud for you. This is an incredible hardware device for your friends and family, or maybe yourself, who have Bitcoin on exchanges and have for a long time, but haven't taken the step to self-custody because they're worried about the complications of setting up a private public key pair, securing that seed phrase, setting up a PIN, setting up a passphrase. Again, Bitkey makes it easy to use, hard to lose. It's the easiest 0 to 1 step, your first step to self-custody. If you have friends and family on the exchanges who haven't moved it off, tell them to pick up a Bitkey. Go to bitkey.world, use the key TFTC20 at checkout for 20% off your order. That's bitkey.world, code TFTC20.
One of the things I wanted to address with this update, and for the new listeners, I've been tracking this for over 6 years now, actually. So since about here, the summer of 2018, the monetary base is basically central bank money. So it's the liability side of the central bank's balance sheet. And like Bitcoin, on-chain UTXOs, it's the core of the system. So that's why they call it base money, monetary base. There's nothing that can be derived further from it. Okay. And when I told you this before, Marty, we first started to track this, was about 20 trillion. COVID, it went up to 30 trillion. Now it's down to about 25.5 trillion. But there are a couple things to think about here. First of all, they're still printing a little bit. Yes, they're printing less than they were before. And actually, to be super clear, in the last year, they are actually pulling on the brakes still globally because of all the COVID stimulus and money printing. But generally, if you would look, let me even take off this. If you would just look at this line here, right, it was the monetary base, and you see 30 trillion 3 years ago, and then now, 3 years later, you see 25.5 trillion, you would think that's something like, 17% drop, right? Like $5 trillion drop in money printing. This is the challenge with measuring fiat money, is that we have 50 different currencies. And though the dollar exchange rate of those currencies might be falling, and it is because the dollar remains the best looking horse in the glue factory, it does not necessarily mean that they are printing less, or let's say drastically less. They definitely are printing less. And in the last year, they indeed have gone to a negative print, like actually trying to contract balance sheets. But this looks more drastic. So that's just one point. Okay, and then the next thing is, if we look at Bitcoin, so since Bitcoin is base money as well, this is a percentage. I'm not showing you the value, but this is a percentage. Okay, so you see here in 2018, we started to look at this, end of 2017, 2018, that top, we're at 1% of the total. And then in the COVID tops, we went to about 4%. And now, as this monetary base is coming down. Bitcoin is still high, relatively going up. I know it's down from the 106,000 or whatever, 107,000. We're at 8% as of the end of last month. Okay, and it's fairly similar at the moment. But I'm stopping this. I should have pulled this out till today, but I'm not. And anyway, the monetary base data is a little bit slow. It updates every quarter. The question is, when we talk about Bitcoin, is a lot of people, and I was talking to some of my friends that are doing from the best Bitcoin data group, really a bunch of good guys that are doing this power curve, which we've talked a lot about, Marty. But a lot of people want to put the thesis that it's the money print that adds to the value of Bitcoin. And though I've been tracking the money print for 6 years, literally the exact same amount of time, 6-7 years now, I've been tracking the power curve, all right, which is just basically, it's an observed trend that Bitcoin is following. And the relationship of the price of Bitcoin on a power curve or power regression seems to still be stronger than the relationship of, say, Bitcoin to money print. For sure, as you can see here, we're just using our eyes. I'm not doing any fancy numbers here. In 2017, money is generally still printing around the world. We're 10 years out of the financial crisis. Bitcoin's hits 1%. In 2021, $30 trillion of base money. Bitcoin hits an all-time high at the time, 4%. All right. But now, notice, we've actually bucked the trend a little bit. It's counter-cyclical. I'm not saying that the cycle is over. You and I both know the cycle is probably not over. We assume it, right? Based on at least the 4-year, but the 4-year cycles. But regardless, at the very moment, central banks are still trying to cool off from the COVID craziness, from the pandemic, and Bitcoin is still going up. Okay, so that's a little bit of a counter-cyclical trend. And that's probably what I would continue to drill home the most, is that I look at this as sort of the backdrop of what's happening, and it is the best, most comparable money supply. But if we look at things like global liquidity or how much money is floating around in the system, a lot of people like to do that. And global liquidity, by the way, a lot of people measure it a different way. I don't call this global liquidity. It's just the monetary base. It's base money, this purple line. Global liquidity, you can throw in a lot of different things. You can throw in stable coins, money market funds. You can throw in
Eurodollars,
bank accounts, Eurodollars, a lot of different things, right? You can get to, hundreds of trillions of dollars. So that is still rising, global liquidity. So from that side, it's still rising. But I actually don't think at the moment any of that is the most important driver of Bitcoin's price. Really, what I think it comes down to is just going back and looking at the price itself, and then asking what do we think that we're looking at when we look at price. And if you look at this trend line, let's take off the bands. We can talk about those in a second. But if you look at this trend line, 96% R squared. I was not the first person to observe this. This goes to our Italian friend Giovanni. He's a very excited character on Twitter.
I was going to say you're much more level-headed than Giovanni.
He's a smart guy, but we both posted about it in 2018. He a couple months before me on Reddit, actually, coincidentally. But if you look at this trend line from 2018, and actually if you go back and back test it from 2016, it's almost the same. It's almost identical. And so then one would need to ask themselves the question, if this line has not really changed from 2016, can we really put so much stock or faith in this line, which is also what I've been tracking since 2018? I know I said 2016 for the trend has been solid, but both of them I actually been tracking since 2018, this monetary base and the power trend. And I think what you see is that, and look, you and I both know they're going to print more, right? Stuff's going to happen. Even Trump's going to want lower interest rates. They're going to print more. It's not over. It's the only thing central banks know how to do. And then when they print, that's going to be gas on the fire for Bitcoin. We all know that, right? But if you really want to notice what's happening to Bitcoin, like as the main driver, not just now, but in the past, not just now, but in the future. In my opinion, this is more of a story. It's more of a backdrop. But this right here is showing something like scientifically amazing. And I would submit to you, and I've said this before, I've said this like 1,000 times, but I think that people need to just think that what you see here when you see the price curve, it's not necessarily just price or interest, it's adoption. It's literal adoption of the network. And I think that that adoption is way stronger than central bank money printing, you know, what Donald Trump says, strategic reserve. I think it is the adoption that puts Bitcoin on this really unbelievable curve. And like I said, if you go back to 2016 and back test it, the curve itself is basically the exact same curve that you're looking at here. This is all time data. But if you go back to 2016, it's basically the same. I've shown you that chart before, right? All the different lines, you know, the 2015 line, the 2014 line. Yeah, it was a little bit wilder in the early days, but this power relationship, and we can talk about more what power means, is just amazingly strong. And I like it. So I actually keep coming back to it. You know, we can draw these trend lines. I've tightened them up a little bit. We don't need to talk about this, but I've shown kind of how they're evolving now. And you can see again, if you look at the future is obviously unknown. It's just a projection based on the trend. They look like smooth. Now I've made the back lines, the bands, not smooth, but you can see that from about the end of 2016, it's pretty close to how the future trend looks. And so anyway, that's just what I am observing and thinking about now with this base money update, because for a few quarters now, since 2022, we've seen global base money fall by $5 trillion, but Bitcoin still, as a trend, Bitcoin also fell, by the way, as we know. That's the green price, and everything else, a lot of scams, right, as we know, in 2022, got liquidated. People got hurt, but it comes back and it's around the trend. And right now, if you just want to know the actual all-time trend, as of when I loaded this chart, which was a couple minutes ago, 7th of March, $89,200 price. The trend itself, $94,000, $94,600, $700. So a little bit slightly below trend, but basically right on trend. And it almost sounds too simplistic to say it, like not groundbreaking enough, even though you see like wonderful charts and you see that the price itself fits it so nicely. But I think that the probabilities are higher than ever that what we are seeing here is that this price curve is simply showing the adoption of a new technology that we've never seen before. And it's that adoption that continues to be this virtuous cycle that gives the price this fit to this curve. Does that make sense, what I'm trying to say? I'm trying to say that it's not necessarily all about global liquidity or central banks. It's just about the network itself.
Yes. As information disperses to the market over time and individuals receive that information, regardless of where the central banks are in a particular policy regime, whether that's expanding the monetary base, lowering rates, or contracting the monetary base, increasing interest rates, individuals are receiving information about Bitcoin that is separate from that policy and making individual decisions that they think Bitcoin is something worth holding. And no matter what the Fed is doing at any given point in time, those individuals making those decisions is what is affecting this trend.
Precisely. Well put, my friend.
Yes.
And I don't want to say like more convinced than ever, because it sounds a little bit Pollyannish, and try to be measured with this stuff, but it's pretty amazing to see. I think what we're seeing is something we just never could have seen with gold. We never could have seen it.
Sup, freaks? Bitcoin is the ultimate scarce asset. Join Bitcoin macro expert Nick Bhatia at a live online event on March 17th for death, taxes, and 21 million. Learn how to shield your wealth, leverage tax-advantaged accounts, and secure your Bitcoin for future generations. Your financial advisor, accountant, or attorney might not be up to speed on Bitcoin, so invite them to join too. Register now at unchained.com/TFTC. That's unchained.com/TFTC. March 17th. Be there.
Does this power trend factor in like the concept of S-curve adoption? Like that's a big meme right now is people looking at S-curve adoption and saying we're right at the cusp of the hockey stick of the S. Would that factor this in?
No, because S-curve adoption usually overall fits something that's kind of like exponential growth. When that S starts to take off, that's exponential. And power is power, so it's a bit different. And I can remind users just quickly here on my site. You can go to still only have this chart up on this redesigned site, but just to explain what the power is precisely. Okay, so I know this is a lot of numbers, and you can't see this. Probably even the users can't see it because I'm on my site, but it's on my site, porkopolis.io/the chart, and it's all about the power curve. It's purely mathematical, and it's just one variable. Okay, so it does not have to do the thing about the S curve is the S curve assumes exponential growth of an industry or a product, and indeed, we could probably find it if we search for it, but let's not distract from talking. If you look at, you've seen those charts where like the washer and dryer, the telephone, the cell phone, all these inventions, they kind of go exponential, like this S curve of adoption, right? It's slow at the beginning, early adopters, expensive, and then it goes exponential and then it levels off, right? It's that S curve, right? You know the chart that I'm talking about, right? They have all these different inventions and they draw it out on the chart. So usually, typically, and this is my understanding, I'm not a statistician, more of an applied stats guy, but those are for specific products that specific companies usually pioneer. It's not necessarily the development of networks or other things in nature like that work in power, which is like a city. Bitcoin is kind of like a city, the growth of a city. So even though if I showed you a chart of global population, it's typically a little under 2% a year. Now we're trending even not well, but close to 1% a year. But regardless, if you pull that on a chart, it's a straight line on log scale. You can tell it's exponential growth. Cities don't grow like that. They grow a little bit because of the infrastructure of cities. You have, you don't need parking spots for everybody. You can go vertical. You can do all these different things. Cities actually grow, they don't explode into the sun exponentially. Cities actually grow in power, and networks tend to grow in power as well. Another way to say that is in networks, there are few large nodes with many connections, and there are many small nodes with few connections. That's a power relationship. So these types of things, those things are not like explosive exponential growth. That's been my understanding. Again, I'm not a statistician, but I read a lot about power. There's a guy that wrote a really good book about scale. It's named Jeffrey West. It's called Scale. The book is called Scale by Jeffrey West, if you want to check it out. So power is more for like networks and cities and things like this. And Bitcoin seems to be exhibiting that. Like I said, I was one of the first in 2018 to observe it, but it's an amazing trend, like I said, and like you just eloquently said, that is presumably unrelated to the broader things that are happening in the economy. It's more about adoption. But just to explain exactly what it means, the power of Bitcoin in this equation is 6, and if it's 6, usually it works to about 40% of the an increase in 40% of the time means that the price will go up by 6, but that's a little bit hard to understand. So it's not exponential. So exponential is constant growth, right? So rule of 72, 10% is the best example. How long does it take a 10% return to double? Is it 10 years if it's compounded? Question to you, Marty.
No.
How long? 10% return.
3.5.
7.2 years. Rule of 72.
Years.
Yeah. So just just drop the percent sign. Take take 72 divided by the number 10, and you get the years time to double. It's just the basic back of the envelope thing, right? So with exponential growth, things grow faster than they seem. A 10% return will not double every 10 years. It will double every 7.2 years. So it's different. And a lot of things do grow in exponentials. The stock market, GDP, population on a global level, like I said, the bond market, that's all exponential. Interest rates, it's exponential. But with Bitcoin, again, it's not. So another way to say this, just to wrap it up with the power curve for today maybe, is if you want to find a doubling point, we can do it with Bitcoin. I show it in this chart here, in this table. You can find this on my website again. But it's not, the percentage is not fixed. There is a proportionate increase though, and what it's saying, you just have to calculate it, and I have it here. It's this last column. It's about 13%, 12.8%, but it's not like per year. It's increase in the time of the network. Okay, so it's kind of like a Lindy effect idea. So it's related, let's say. So if you have right here about 1,000 days of Bitcoin's network occurred on November 2011, it was 1,000 days of Bitcoin. If you increased the life of the network by about 13%, all right, you would get to here 11,066. The price would double. Again, you increase it by, it's less than 13%, 12.7%. Here from 11,066 to, you get to 1,166 to 1,300, another 12.7% increase, the price will double. So bottom line, that's what the power curve represents, is a 12.5 to 13% increase in the network's time, usually the price, or i.e., the adoption doubles. That's the idea with what we see with the price of Bitcoin. That's what the power curve means. It's
and I
different than exponential.
Well, let's dig into this too, because I think Bitcoin's unique. Everybody's been posting the S curve chart, saying here we are, we're beginning the S curve, and correct me if I may be wrong. I'm assuming I'm wrong, but could you have exponential adoption in the sense of the number of individuals that are exposed to Bitcoin in one way or another? However, that S curve doesn't materialize in the price chart, because as the network grows from a market cap perspective, it gets harder to move the price up significantly. Like you could have exponential adoption in terms of the number of users. However, the amount of capital necessary to create an S curve adoption like chart and price is enormous.
I would say theoretically not, because what we observe with Bitcoin is this power curve that I showed on price, it holds for a variety of other indicators, like hash rate. The best fit is power. Address growth, the best fit is power. Even transactions, the best fit is power. So it seems to be that if you look at all the metrics of Bitcoin, it follows this network type adoption of power.
Not S curve.
Yeah, and not an S curve. Now, if the S curve is true, and for whatever reason, for sovereign wealth fund or strategic reserve, whatever it might be, war, and Bitcoin goes exponential, then we would just have to say goodbye to the theory that it's tracking something like a network growth of a power curve. But we haven't observed that yet, is the point. And in fact, as I have been trying to say, I think it's actually becoming even stronger quarter by quarter, because it's still pretty close to the price, and market cap works in power. Like I said, address growth, hash rate. And that's actually more of a divergence from the way that global flows are going. And I don't have the chart up. It's not, I can't pull it up at the moment, but if we drew a relationship between that percentage, say Bitcoin versus the monetary base in market cap terms, like I said, we're about 7% now. We used to be 1%. Obviously, it used to be 0% 15 years ago. That itself is a power curve as well. So no matter how many different things you draw, the relationship seems to be power, which suggests that what you are looking at is adoption and adoption of a network. So I actually don't subscribe to the exponential theory of Bitcoin or the S curve theory of Bitcoin. And so far, it's proven correct. But, of course, never say never. And I'm not going to be complaining if hyper Bitcoinization looks like, blow off everybody's faces adoption. But you got to think about other things too, like even exponential growth, which is faster. And like I said, the stock market is exponential. Unicorns are exponential. The growth of unicorn companies. This S curve is exponential on the explosive part of the curve. All of that is exponential. But even there, it takes time. It's like Facebook stock, like any stock, over the long run is going to follow an exponential curve. Okay. That's just one company. It's one stock, and that's actually how they grow. And it's amazing that this rule holds. But even there with like lower level exponential growth rates, like it's not even that shallow. Like the S&P is maybe over the long run 9% with dividends, 7% without dividends. At 7%, it takes 10 years to double. It's just how it is. It takes time, right? Facebook started before Bitcoin. Now, that's another interesting example. Right? I haven't done the numbers. I don't know about all Facebook, because Facebook also is a social network, but again, it's a company, so it's constrained. It grows differently. But think about that. Facebook started in 2003, and now Bitcoin is the value of Facebook, market cap wise. Bitcoin started in 2008. So Bitcoin actually has shown to grow faster than Facebook. Okay. But again, that fast trajectory is not exponential. It looks like this. It's just like slowly declining curve. And unless you, dear listener, are not excited by this curve, or some people, again, wanting that face ripping blow off exponential growth, this right here, right now, is a 45% compounded growth rate per year right now. So it's not a low return. And of course, if you caught it here at the dip in November, December 2022, when Peter Zeihan was on Joe Rogan saying Bitcoin at $16,000 was $17,000 overvalued, you would have well in excess of a 45% compound annual growth. If you buy below this line, you're going to have way higher, or potentially way higher than 45%. If you buy above this line, you'll have a bit lower than 45%. But that is the trend of Bitcoin right now. So I can translate things into compound growth. And again, I've done that on my website. It is a declining compound growth is how it looks like. So right now, here we go right now. By the end of this year, it's going to be 42%. Last year was 45%. By the end of this year, it's going to be 42%. By the end of 2026, 39%. 2027, 36%. These are still enormous numbers. And I've actually measured it out until the end of, I wanted to see when it would go to 10%. You want to take a guess at when this goes to 10% per year, the power curve of Bitcoin? When does the annualized return of Bitcoin fall to about the level of the S&P with dividends reinvested?
2045.
It's past 2160.
What?
Something like that. Yeah.
Let's go.
So think about that.
Holy shit.
Think about that. Now, again, I have no idea if that's going to hold. I have no idea if the trend's going to hold. But think about what that actually is saying. The growth is more explosive than you can realize. It's just you're impatient for that face-ripping exponential blow-off top.
2160?
Yeah. Over 100 years. And of course, I hasten to say, I'm not saying that we're still going to be using dollars 100 years from now, and that's going to be the price increase, whatever. Obviously, we all know we're going to have some change, probably within the next 20 years at least, maybe sooner, where we're going to go on some sort of a Bitcoin standard, whatever. But this trend is extremely strong. And that's what I'm just trying to point out to people.
And while I also wouldn't mind an exponential face ripping, hyper Bitcoinization, God candle, whatever the hell you want to call it, I think from a social cohesion perspective, this is what you would want. And again, this more controlled power trend growth as opposed to exponential S curve, particularly as it pertains to the value of Bitcoin and who has exposure to it and who doesn't over the course of time. Like this power law adoption, at least intuitively to me, makes it seem like it can also facilitate a transition to a Bitcoin standard much more orderly.
And I never say law, by the way. Never have, never will. That triggers a lot of people. They
Power
think
trend.
When you say it's just a trend line. There are linear trends. There are exponential trends. There are logarithmic trends. There are polynomial trends. There are a lot of different trends, and power trend is one type of trend. So that's in my view, that's the big picture. That's the exciting thing about Bitcoin, is that it is exhibiting something that is indeed, as the word suggests, extremely powerful, but it's just not as face ripping as you see. And to follow your point, Marty, usually when we see exponential trends in the world, they're very slow exponential trends. For some time, you might get again, some unicorns going pretty fast, but exponential growth usually is a lower percentage term. And if it does seem to explode for a couple of years, that it will cool off, and that's the S-curve effect. But again, the S-curve effect, we typically don't observe with networks. We more observe it with companies and inventions by a company. That's an important point here. So, or by an individual, like the telephone, like the washer and dryer, these types of things. There are, of course, they are eventually ubiquitous, and eventually other companies copycat this, but that's not what Bitcoin is. Bitcoin is a totally different thing. It's a network. You have plenty of people on your pod by now that have described Bitcoins in many different ways, but at the end of the day, it's a network. It's a protocol. You plug in, you plug out if you want. So that's how I describe it.
Yeah. What should we say to all the people putting out S-curve charts? It's a big meme.
Yeah. See, as you can see, or as perhaps you can tell, I don't even have Twitter on my phone. So I'm trying to, I didn't even know it was a big meme, and I don't really care. That's probably what I would say. I'm going to keep doing my numbers. This is a pretty strong trend. I do think that we can have, you want to have fun with the numbers here. Like here's the percentiles over the years, the 97.5 percentile, which turns out to be about a 3.6x. I made this a little bit more conservative, by the way. It's not worth talking about from prior ones we've talked about, because I've evolved it. It's not worth going into. Anyway, it's a little bit more conservative. So the end of the year, you just want to have fun with it. You go out December 2025, presumably, right? We're on the 4-year cycle. Presumably by the end of this year, we could have some more excitement from Trumpistan or whatever on Bitcoin. And we get to end of 2025. The trend itself, 125,000, 97.5 percentile, 450,000. That's my number. There are a lot of different people. Look at the quantile regression analysis. Some friends of mine are doing that. Plan C and Cena, and these guys are really smart. Some really smart quants and physicists and economists are doing this now. Mine is very simple. I just taken a multiple, running percentiles on the multiple just to keep it simple. So if the trend basically is 125,000 by the end of the year, my simple way to look at it is 3.6 times the trend is pretty indicative of a high number. And you can see that, right? You can see how it evolves here. We didn't quite hit it in 2021, but it's a decent way to look at it.
Yeah. On the subject of this data group that you were alluding to earlier, and the physicists and statisticians coming in to observe this line, who I'm assuming are coming from external bubbles, if you will, maybe not Bitcoiners first. I'm curious what their observations are, if that's true. That characterization.
Similar observations to what I've shown you, and I think mostly it's just.
Is it shocking to them? Is it fascinating?
Yes. It's curiosity, and it's curiosity with that R squared in particular. That 96% R squared is something impressive, and you just don't see it too often in nature. Of course, you do with certain things, and again, like I said, I'm not a statistician, so I can't rattle all these things off. But what it's saying is, this price moves around. In its basic level, price is moving around this black line 96% better, or with 96% less variance than if you just drew the average. And of course, the average price wouldn't make any sense. So of course, it's going to look better. But you can draw this with hash rate, and it would also be a similar R squared. With market cap, similar R squared. With addresses, similar R squared. So it's a really amazing fit, and that's what I'm hearing when I talk to these guys. Is just how fun it is to model this compared to other things like, the inflation rate or gold price or something like that. And what you find when you do that, I mentioned it a little bit before with the let's measure Bitcoin's market cap with the monetary base. What you find is those things fall away, and what remains is the power curve relationship. So here's another way to put it. The monetary base trend itself. I don't know if I can pull this up quick enough.
You need to add
monetary base
search.
Yeah.
Told you this last time.
You're going to keep telling me because I don't have time to program it in. I can just do Control F on the browser, by the way. It would be fine. Give this a second. It's a monetary base just on dollar terms. Very interesting, by the way, way low in dollar terms. And again, they're printing a little bit less, but really this is dollar hegemony returning. This is dollar strength is why this looks, that's the main point since 2020. So way low, way below this 2.5, we're outside the range of normal behavior, which again should give most people comfort because if we assume I know we spent a whole 20 minutes saying it's not related, but of course, if liquidity really gets roaring on a central bank level and they start printing more again, of course that will affect in the short term as well, Bitcoin.
Well,
and go ahead. Yeah.
On that point, maybe that's what that's what I wanted to dive into is the psychology behind this adoption and how the power trend, what it tells you about the psychology, and maybe. As you said, we're low below the lower band here, so you can assume that money printing is going to go up. Maybe it's not a function of the creation of new monetary units distributing to the market, then flowing into Bitcoin, but that expansion of the monetary base sends a signal. It's a piece of information that individuals digest and say, wait a second, they're printing money. Is that good for me? Is that bad for me? What are the alternatives? And it's not it's not the mechanics of the expansion that maybe to a degree it's driving the Bitcoin price, but maybe it's the information that is distributed to market that leads people to begin to wonder, should I adopt Bitcoin?
Yes, I think all of that is true, what you said, and all that adds to the network effect of Bitcoin. But here's another way to say it. And this is what I was getting at. You see here, this is monetary base. This is just like stocks, just like bonds, just like population growth on a worldwide level, not on a city level. Just like GDP, you put it on log scale, the trend becomes a straight line. Okay. It's obvious. It's a straight line. And by the way, look at that, 99% R squared. So this is a pretty beautiful trend line as well. Exponentially for the monetary base, for base money. This is how the system grows. It grows exponentially. So people copy paste that word to Bitcoin all the time. You no doubt, I'm sure you've had 100 guests.
I've definitely used it.
Sure. And I probably have too at some point as well. But actually, if you look at Bitcoin's dollar growth, go back to this curve. This curve. It's this slow asymptotic sort of decline, but very, very slow. You have to measure it out to understand how slow it is actually. And if you compare then this curve with this curve and you put them together, you can do a market cap, you can do a lot of different relationships there, right? What you would find is the curve is still bent. It's still power. It's not exponential. So what you find is, what we could conclude there's what I conclude is the regular world sort of falls away. It melts away. The regular, the traditional exponential growth, it doesn't come nearly as close to exhibiting the type of growth that this is with Bitcoin. Does that make sense?
Mm-hmm.
It remains. You can do this in many different ways. You can look at Bitcoin as a percent of the monetary base, or Bitcoin as a percent of GDP, or certain money supplies. All those things grow exponentially. And when you make that conversion, when you look at things in a percent term, you still have that power curve growth. Like this.
Yes.
So this dominates the relationship.
And that's what I'm trying to get at here. Obviously, this is a price chart, power trend. I think I'm really fascinated, curious right now about what that says about the psychology of the overall market and individuals, and like how they come to adopt Bitcoin. And because you have I think what is true is you have an exponential amount of information about Bitcoin, whether that's price data, transaction data, hash rate, but then beyond that, podcasts like this, information, people mentioning the word Bitcoin, like going up exponentially. But despite that, you have this somewhat controlled adoption curve as descripted in this power trend chart that you're showing right now.
Yeah,
does that make sense to you?
No, it does. I think we're trying to reinforce the loop, and I think it is a loop. There are, when it's not false to say that when adoption increases, liquidity in the Bitcoin network increases. Of course, it increases, right? It's not a false thing to say that when the price of Bitcoin increases, there are more active addresses on the Bitcoin network, or the hash rate will increase. All those things are true. I would just say, and it's sort of a cautious, sober, perhaps maybe be a little bit patient reminder, is that the relationship that dominates there is this sort of this power relationship, which I hasten to say every time, like don't get discouraged with that, or don't think that it's not an exciting relationship, because it's super fast. And again, price 45% per year right now, slowly declining. There's nothing else like that in the financial world. Trump coin's not going to get you that over the long run.
It's the best meme coin in the world. What are you talking about?
I should have tuned into your show when that was released. I'd be curious to hear what you guys have to say about that, but I haven't heard any of your thoughts on it, so you're going to have to... Sorry to be the bearer of that news, but... Yeah, it's insane. It's insane to think about, actually. If you, I'm trying to boil it down to brass tacks as I see it. And look, GDP, 3-4% growth per year. Exponential, that's what it is. That's the slope of the trend. Bonds, 4-5-6%, depends on the market, depends on wherever you are in the world. S&P 500, 7%. With dividends reinvested, 9% long term. These are all exponential curves. That's a fixed percentage. With Bitcoin, you throw on this power curve relationship, you do any multiple divisia sort of different relationship that you could do, the power curve dominates. And so that shows me that we're looking at something here, which is, it's just like, it's astounding. It's got to be, that it's certainly the first time in history that we've seen a monetary network like this come ad hoc, but certainly for economic relationships as well. It's just like the amount of data that we have, it's incredible to see. So I get more encouraged, like I said, every quarter, where you may get the monetary base that's falling a little bit. You may get whatever, Donald Trump farting, and the curve remains the same. It's been the same since 2016. So anyway, I get back to the same point sometimes, so we can move on from that.
It's like the ninth wonder of the world. You got compounding interest and then Bitcoin's power trend adoption curve.
So you're adding compounding as the eighth, and then
Yeah.
yeah, I think that's not a bad way to put it, my friend.
Yeah.
Not a bad way to put it at all.
And I mean, and it's terminally online person you're talking to right here. And it's easy to get caught up in the day-to-day headlines and drama and bullishness and bearishness. And that's why I love talking to you every quarter, because this trend specifically, it's like, that is literally all noise. If you just look at the trend, it's happening.
Well, wait till we get to Ukraine, my friend. No, one more thing actually to say about this, and just very briefly. Another thing that I think is confusing to people, and I put this in my report, you can find it on Twitter. It's the last monetary base update. I don't think I spelled it out before as clearly. But again, just measuring the trends, looking at the trends. As I just said, stocks, bonds, GDP, population growth worldwide, all these things. Exponential growth is a very established, constant thing in finance and in nature and in the world. Straight line on log scale. Bitcoin has a couple different curves, actually. So in dollar terms and hash rate, all these things, it's power. But there are others that make people perhaps throw in that word exponential. So one thing that is exponential is the decay of the coins. All right. So as we know, every 4 years, that halves. Okay. If you plotted that out, I think I have it. Let me find it for you. If you plot that out on a chart, that's something like 16% per year, right? Down. It's an exponential decay. I hope it is this one. I'm not sure if this is actually going to be right, but
It better be.
yeah, it is. It
You're
is.
fired.
So there it is. Look at that. Look at that. Straight line on log scale. What are we looking at here? Let me take all this nonsense off.
This makes sense, though. This is something that is programmed into the protocol.
Yeah, but this can confuse people. They can see this and maybe think what you have here with the emission of coins is exponential decay. All right, so just the monthly, I'm doing it by monthly issuance. Obviously, we can do, back 50 coins per block at the beginning. But here where we are right now, 2025. Let me zoom in to me. Here we are. 13,000 a month. All right. Last year, before the halving, 27,000 a month. Okay. So, but if you plot that out, log scale, straight line, you get up with 100% R squared. So it's for sure exponential decay. Let me give you the compound annual growth rate. Lifetime. There it is. It's negative 16% per year. I got this going all the way out to 2140. So without a doubt, this is exponential. And that I think actually I'm not really sure people think about it as deeply as I just explained to you, but they might have heard, they might have somehow intuited that when you have something and it halves every 4 years, that sounds like, there's some math function there. It is actually exponential. It's exponential decay. But then also with Bitcoin, something that's different, and it's different than gold, silver, is when you take this exponential decay and you map it out as a supply curve, that is a different function still. That is a logarithmic trend. So let me...
It's an asymptote, isn't it?
It is an asymptote, but it's a logarithmic. I mean, that the form of it is logarithmic. I don't know if I'm going to find this one. Too much, dude. Just too much.
You'll find it. How many goddamn charts do you have?
Too many. So if you put this out and you did the same charts, right? So we don't have then power, we don't have exponential, but Bitcoin actually has a third trend line, and that is just the good old supply curve itself. If you looked at 50 Bitcoins on January 3rd, 2009 to 21 million in 2140 or 2141, it might be a little bit off, but by and large, that's actually pretty explosive growth at the beginning, and then a real very, very gentle decline from there. But it's not exponential. if I drew a curve there, if I could find the thing for you, you would see something that most closely, it's something like a 90% R squared would do a logarithmic growth. So having said all that, Marty, unlike most of the financial world, most of the natural world in economics or whatever, population growth, GDP growth, unlike gold and silver, all those things are exponential. It doesn't matter if you're looking at the emission, the increase of gold coins per year, or gold ounces, I should say, the increase of silver ounces per year, whether it's industrial or not, all that stuff. I've measured a lot of it. It's all exponential. Exponential down, it's turtles all the way down, exponential. With Bitcoin, there are three different curves. You have exponential decay, you have logarithmic, the actual form of the Bitcoin supply curve. And then when you put market data to it, you get power. So Bitcoin actually has three. Not to confuse the picture, and maybe I did there, but it's, Bitcoin is complicated. It's different.
Well, as you're describing this too, it's making me wonder just think of Satoshi's design as incredibly beautiful, because the first two trends that you describe, the exponential decay of the subsidy distribution, the halvings, and then the logarithmic of the total number of coins at any given point in time, like those are fixed variables that were set out when the protocol launched. And just thinking of like systems design, like was just setting those two variables as fixed, what enables this uncontrollable, unfixed variable of the power trend. And these are sort of like the ingredients that lead to this type of controlled adoption, right?
Yeah. Compared and to, maybe some statisticians could comment on that. If I think I've asked GPT some of those things, or maybe I haven't actually. I'm just thinking about it now. If you multiply like you said, if you multiply an exponential by a logarithmic and you get a power, someone asked GPT that and see what it thinks. I'm not blanking off the top of my head, but it seems like something pretty wild, pretty different. But the most, how would I say this? The most natural thing in Bitcoin that we can see from a market perspective is the price. Price is the best signal in the market, as we know from Mises, and that turns out to be a pretty strong power curve.
So you've been doing this for 7 years now.
Almost. Actually, the same year. Yeah, the same year that I started the monetary base research. It was in 2018.
So that's like, are you beginning? Is your enthusiasm over the monetary base research waning as you succumb to the power trend inevitability?
It's like into the Matrix. Yeah, no, not at all. I think it's an amazing backdrop to look at. Here's another one on monetary base. We have the monetary base here. Just showed you. Talked about it a lot, right? 30 trillion. Now it's been down, sort of this weird jaggedy down as interest rates have been rising up and down. SVB bank collapse, whatever, in 2023, all that stuff. Monetary base is interesting, and it puts a backdrop. I was just having a discussion with this actually with one of the guys, but I think it puts a backdrop on how things grow. Here's that 12.7%. By the way, it's a weirdly same 12.7% as if you might remember that number. I said 12.7% is the amount of but it's different. These are different 12.7%. So to even take it to a whole other weird level of numerology.
This is days since launch, right?
Yeah. Increase in, if you increase in time by 12.7%, the price doubles. That's the power relationship that we're observing with Bitcoin. This is just straight up exponential growth of the global monetary base. It has nothing to do with Bitcoin. It's just the top 50 currencies in the world. Dollar, euro, yen, yuan, all are inside this dollar figure. Something obviously looks bad here. As you know, if exponential trends are to continue, and as we just talked about, we're at the low end, and this is now in native, so you can kind of forget the dollar, but I've talked about this many times. I don't want to bore people with the numbers too much, but this is now in native, these big mountains, these peaks. See the COVID stimulus, we got to 30 2.8%. Okay. It was the peak in February 2021. QE1 worldwide is a worldwide weighted figure, if you're curious how I got that. And this is not like looking at the dollar change. It's looking at the change in euros, change in yuan, change in yen. So it's a huge spreadsheet to get to this. But the 33% was the high in 2009, 28% in 2011, and then 33% here in 2021. So QE1, QE2, QE3 is actually quite a dampened effect. Can't see it as much on the global figure. Anyway, point is, you can see, as we know, we've talked about this many times, Marty, right? Leading up to the repo crisis in September 2019, they really tried to normalize the balance sheet globally. Major central banks in the world. We had the repo spike, and then we had COVID. So we certainly were not on a healthy level. We weren't on a sort of sound base, and I'm just waiting for that to happen again, as I'm sure you are. This is now a record. It's like 3 years where we've been at pretty much flat or no growth. If you read the tooltip, I'm not showing the negative bars, but this is the weighted average. So that let me take the line off so you know exactly on the tooltip what I'm looking at. You got here negative 1.6%, negative 0.7%. This is just trailing 12 months, 0%. This is what I mean when I keep saying it's roughly flat, even though the dollars are decreasing, the dollar value. And now you can see in the trailing 12 months, it's actually one of the low ones, negative 3%. So they really are trying to rein in a monetary inflation. But you and I both know how long can that last.
Yeah,
doesn't seem
doing
like
research on this.
Yeah, it's a record. 3 years.
Shout out to Perplexity Deep Research. I wrote a newsletter about it, I think last week or the week before. But looking at repo markets specifically and thinking about September of 2019, like the repo markets dry up, overnight rates went to 14%, and that necessitated the Fed to create new facilities, inject liquidity temporarily, papered over, and then COVID happened, and you had the excuse to print trillions of dollars. And so we're approaching that again. Like, I'm not sure if you've been following the reverse repo market. Liquidity in that market's been drying up pretty rapidly.
I mean, it's been going. It's been drying up in the sense that central banks are releasing it. They're releasing it back into the market. The question is if the market can absorb it. But the central banks, with that, go ahead.
Well, that's what I was doing research on. Like, is it going to be? Can we use 2019 as a predictive sort of pattern recognition to time when there could be an emergent liquidity crisis in the system? And it seems like in parallel of all the policy decisions that were made post-COVID in terms of monetary expansion, lowering rates, and then in 2022, beginning to hike them, I think one thing the Fed has changed behind the scenes is the reference rate has moved from LIBOR to SOFR. And I think the intent was to avoid the 2019 like spasm in repo markets because they have more control over SOFR than it did LIBOR. And I was doing deep research. Who knows how accurate the deep research of these AI tools is yet, but I think it's pretty good. I was checking the sources. And so I think the idea is they've really changed the reference rate behind the scenes to enable reverse repo to drain without having a spasm, at which point they'll begin going to the balance sheets of commercial banks and trying to unwind them. Basically just extending the amount of time that they can try to tighten the balance sheet.
Right.
And that's where I imagine, based off the research I did, that the liquidity crisis will emerge is once they move from overnight repo markets to trying to unwind the exposure they have to the commercial banking system. So many people are saying reverse repo is going to drain, and then we're going to have this liquidity crisis. Based off the research that I did, who knows how good it was and how good my understanding of it was, but I think that's one thing, like reverse repo could drain. The liquidity crisis may not emerge, and it may not emerge until they begin trying to unwind their exposure to the commercial bank balance sheets.
But when the crisis happens, did they say what gets flooded again with liquidity? Is it the reserves or the repos?
I think that's dependent on what's needed at that
What type
given
of
point in
crisis
time.
it is?
Yeah,
Yeah.
exactly.
So here is I have a United States M3 money supply. Remember, most people quote M2. Okay, M2 is not the money supply. If you want to talk about global liquidity, obviously global, you can do other things, but M2 is not the highest money supply. Federal Reserve likes to tell you that it is now, but remember they had an M3, stopped publishing it in 2006 at $10.3 trillion. Can you hear my daughter in the background?
Yeah.
I'm going to send a text a little bit, yeah.
No, you're fine.
So 10.2 trillion was M3, M2 was 6.7, and then they stopped publishing it. This was obviously, have we talked about this before?
No.
So this is obviously very interesting looking back in hindsight that, 2 years before the global financial crisis, the Fed obviously knew something was awry. And they stopped publishing something
Let's
where
show them that anymore.
there are two things in this M3 which are very much had to do with the global financial crisis, and one is repos, repurchase agreements. The second is Eurodollars. They don't have control of either of them anymore, in my understanding. Repos somewhat, but Eurodollars, no. No one knows how many Eurodollars there are in the world.
No, but that, again, going back to the changing of have you read Tom Luongo or clued in on Tom Luongo's theory?
Yeah, but not lately.
I mean, that's his theory, is that, again, going back to the 2019 to 2021 era, the Fed realized the Eurodollar market was unbounded and they really had no control over it because LIBOR was the reference rate. And so by Tom's theory is that by transitioning the reference rate from LIBOR to SOFR, which the Fed has more control over, they are able to drain the Eurodollar markets because they control the reference rate, which dictates the expansion and contraction of that market.
Yeah. I have heard of that theory, actually. And they can't control it. Like, it's interesting to see also what's happening with the stable coins, because they're maybe trying to, if you can direct some of this dollar interest worldwide back into a separate asset that you can still collateralize and trade separately, i.e. a stable coin. But you can somehow bring it back into the fold where those, for sure that those stable coins are actually buying actual U.S. treasuries, and then the Federal Reserve can somehow get a control of that. There's a lot of, then that would make it easier for them basically to control that liquidity. But of course, even there's questions because yes, we have Lutnick now closely with the Trump team, but that's not the only stablecoin issue. They are the biggest. And we got a long way to go. Also, it shows you, I think, how, again, if we want to go back to put our liquidity hats on and say that dominates the situation, like there's a lot, stablecoins are a very small market right now. They could dump trillions into there, trillions, which will get them more, as long as somehow the New York Fed is, managing this, regulating this more, that will give them more control of those short-term rates for those liquid instruments. But anyway, the point is, if you look back in time, Eurodollars repurchase agreements way actually higher than I think. Hold on, might have to mute here. Hear my daughter crying. Just say something really quick for the dead time.
Okay. Children are awesome, If you're out there,
Yes, they are.
you've got a partner. You haven't put a ring on it. Gentlemen, just pull the trigger, okay? Start having babies.
I love it. Nicely done, my friend, for the dead time there. Sorry, guys. I had to paper thin walls here in Eastern Europe. So back to the M3. Two very conspicuous items that are part of M3, Eurodollars and repurchase agreements. Fed lost control of, for sure, Eurodollars by 2006. Repurchase agreements, not great. Now, I've done an M3. It's a little bit more, it's less exciting. It's also, you can only do it with quarterly data from what the Federal Reserve does, but you can put it back with repos, and with repos that the Fed data has added since then. Look at this.
What are you talking about? It's more exciting.
Yeah. Well, they would never publish this like as a one number. If you actually go through the data, they look at all the repos. They're publishing now in this happened after Dodd-Frank and stuff. They had to put more data out. If you add it up, it's even higher than what they were publishing in their own M3.
So they had to print retrospective data too.
Yeah, they did. And some they didn't. I have a separate repo exhibit. We don't have to go into that too much right now, but like I have, because in repos, you have repos in the commercial banks, repos in the shadow banks, money market funds, repos at the Fed. There's a lot of different repos out there. But anyway, there were gaps in the data. Some of the data I had to regress linearly, all the rest. But this is actually a little bit higher because I think it's a little bit more detailed. But Shadow Stats was doing this, for 10 years. I don't even know if that John Williams, he's a little bit older. I don't know if he's even publishing anymore. But this is kind of like, you can think of the Shadow Stats M3 data. There was that back in the day. It's very much looked like this. We peaked at the global financial crisis, then we liquidated. 16 trillion went down to 15 trillion, but that should have been liquidated way more. The expansion of the monetary base, all that stuff that happened here. So they were bailing out hedge funds, money market funds, all the rest. We know that story. But here's the interesting thing: M3, this M3, which that is the people that are showing M2, it's not the broadest money supply. You got to look at M3. That includes time deposits in large accounts. That includes repos. And this doesn't even include Eurodollars. I have taken out Eurodollars because
it's a black
I can't
box.
find a proxy. I can't find a proxy for it yet. And it's probably huge. It could be 10 trillion, it could be 50 trillion, who even knows. But what we see right now, if you notice, just look at you see the difference between number 2 and number 3 there, how it's number 3 is kind of, there's a divergence. And what did you see before the global financial crisis?
A little divergence.
A little divergence. So, I'm not predicting a crisis in the next, around the corner, but we are clearly seeing here an increase in broad money while base money is staying the same, slightly contracting. And to your point about the repos, so here was so this is basically monetary base is the black, and that's what I kind of in my exhibit. And then with this gray, with Fed repos, that's the other main liability the Fed has on their balance sheet. It's basically base money for non-banks, base money for money market funds and for other market players that are too scared to play with each other, so to speak, in the sandbox, that they want to go to the Fed and get like the safest liquidity. And the Fed says, sure, we don't trust our own economy either. We'll give it to you. So now, look, the Fed is giving some back. So notice, let me take off M2. You see how M3 is basically, it almost looks like it's moving up in the same, like almost at the same slope as that Fed money, which is in the negative side of the, you see how they're basically just basically what's happening is the Fed is letting that liquidity go back into the system. And that's, to me, that looks dangerous. I mean, that could be why, stock market's ripping, although it's not ripping now from Trump, but
Is that the Fed or the Treasury though? Did you read Rubini's paper on Yellen's Treasury policy? Like over
No, this is the Fed.
This is the
Fed. This is the Fed's balance sheet. So, this is bank reserves, right? Is in black. This is just base money, as we always talk about. This is what the banks hold as an asset and what they lend off of. And notice how, look, in a quote unquote normal economy, bank reserves were like nothing. Banks wouldn't hold them because they traditionally yielded no interest, and they would put money into the economy. That's what you had here. But obviously, the divergence was happening long ago, and we don't need to get all of that into that on this podcast. Once they did the major bailouts, once they blew out their balance sheet, QE1, QE3, they have not recovered from that. They say they're going to try to recover. They want to try to draw a trend line from, say, here in 2008 to out here and like try to normalize it. In my opinion, I've drawn these trend lines as well. Like they're way above it. It's going to take a long time to normalize anything pre-global financial crisis. Anyway, what I'm trying to say is they are doing a major, not from a bank reserve perspective, as you were referencing in this paper that you talked about. Bank reserves, you can see, is relatively flat still, but they are putting these repos back into the system. And when they go back into the system, money supply goes up, broad money supply, and you could see M3 going up almost at the same rate that those repos are coming back in. So that is, again, more liquidity chasing, okay, some decent economic activity. We haven't even talked about Trumpistan and tariffs and trade wars and, global partners yet. But again, I'm not hoping for a crisis. I'm not hoping Trump does not succeed. I certainly am in favor of cutting government spending. I know the liberals are all running around with their hair on fire, but
well, on this note, there
are issues in the economy that are not stable. That's what I'm trying to say.
But let's get down to the mechanics of how this growth in M3, this divergence, and I think you're saying it's because of repo activity, how that actually materializes in new dollars entering the system. So with the growth of the repo markets, does that give the banks more confidence to issue loans, which leads to dollar creation? Is that how
theoretically has nothing to do with the banks. Most of the repos are held by non-bank entities, money market funds. So it's just not it's just a separate entity. It's a separate group of individuals that are playing in the market. And let me see if I can find this breakdown. More dead time than I usually like to do for the show.
I'll just cut it.
Oh, okay. We're not live?
No, we're not live.
Oh, I was speaking like we were even live, so that's great. Now I can just waste your time and enjoy it. Sorry, Logan, but I don't mind wasting Marty's time.
That's fine. I love when you.
God damn it!
Keep this in, Logan. Keep this in.
You tricked me. You tricked me, dirty bastard. You want to restart this? What did you ask me about the repo market? We talked about if it's so what you're looking at here.
How do new dollars enter the system if they're going to money market funds?
Right. So these are new dollars, and repos kind of similar to money market funds. Let's start with money market funds. It's not been on this chart, but money market funds are also part of M3. So entities that issue money market funds, they're not banks. They can be related to banks, sister companies or whatever, hedge funds. But money market funds are basically like a stable coin. And when they issue those tokens or those dollar balances, like when you sell stock and you have money with your broker, right? That's a money market fund. It's not a FDIC insured bank account deposit. On the other side of that trade, for you holding those dollar-like instruments in your brokerage account, the money market fund is holding treasuries, all right? And they take a spread. So they take a spread on the interest, basically. What you see here is, so that's money market funds. Now, money market funds are also a huge player in the repo market. So what money market funds will say is they say, okay, Mr. Hedge Fund, come to me. I have like a huge pool of liquidity here. I have all these treasuries, but you know what? You can take the treasury if you need it for shorting or taking to your other broker and do something else with that. Take my treasury or did I say this backwards? Take my dollar balance, it should be actually. You give me some of your treasuries and you pay me an even higher balance than I have with my own dollar balance. I don't know if that sounded correct the way I've said it, but it's more or less like that. It's basically you have a stable coin and then you just rehypothecated the stable coin into another loan to make more money than just what the US government would pay you. Okay, so you have a third party that's entered the transaction. That's what a repo is. So this is the repo market, and they do have this stuff actually charted out at the Federal Reserve. It took a lot of time to do it. And the repo market has a lot of different players involved. And it's still just like regular deposit money, but it's pure rehypothecated money. And you can see before the global financial crisis, here, this is better. This is a better way to look at it. Look at this. See this green?
Mm-hmm.
This is what the Federal Reserve was quoting in their M3. Was the dark green. It was only repos at the commercial banks. But there were a whole other set of repos in the shadow banks, or basically non-bank entities that were, money market funds, hedge funds, pension funds, all playing around with this stuff, just rehypothecating cash that's doesn't even exist, but whatever, that's fine. I'm not even opposed to doing it. Just caveat emptor. Don't ask for a bailout when it happens. That's actually the funny thing.
And this is getting to the point that I was asking though. So like it's monetary expansion via credit creation.
Every monetary expansion is that. That's what a bank account is as well. Monetary expansion. The only thing that is not monetary expansion via credit creation, and it's still printed out of thin air, is monetary base. That's why I keep saying monetary base is the most analogous money supply to Bitcoin, because it's core of the system money. Only the central bank can increase that. As we all know, there are plenty of cascading effects that always happen down the system, a lot of unintended consequences. We can talk about Mises and Hayek and all that stuff, but still, you can graph what is core of the system money, and that is this money, monetary base. And this is a global figure. All right, so 25 trillion. Anyway, US is about 5 trillion, 5 and change. Let's go back to this. This is just M3 money, as you see here. Repo market, part of M3 money. We don't even have to look at interest rates. I like to look at money supplies more. Look at what happened before the global financial crisis. The repo market, the Fed wasn't even reporting this. I should have had the repo section on here as well, just to show you. They stopped publishing it in 2006. The Fed was only reporting the green. All right. And look, I had to do a regression here because when they retroactively provided more data, they didn't even provide it. So it's just crazy the amount of different information that you have to do to put this together. Anyway, I have it for you, Marty. So we have the repo market here. This was not reported ever. This was not, the Federal Reserve knew, of course, but they weren't reporting it, and they stopped publishing M3 in 2006. We see what happened. This eventually blew up the market. This is mortgage-backed securities are all in here. All sorts of just crazy schemes where you say, hey, I got an asset. You take it, hold it for a little bit. I'll pay you more interest than you're getting from the federal government, and everybody will be happy. But of course, if more and more people do that, the more and more of these claims you pile up, the bigger the money supply is that you get. And we can measure this against other things, against gold or stable assets to try to get a multiple. We can talk about that in a second. But you just look in raw figures. We exploded here from mid 80s to the financial crisis. $4 trillion repo market, huge crash relative to the repo market. We went down. So that trillion that I showed you, part of M3, was basically all the repo market crashing, right? And then we went back up, 2012, big spike here during COVID, and then flat, and then now we're up again. But during this period, post GFC, there is now another huge player in the market, and I have to show them in a negative to make it make sense because it's central bank money, and that is the Federal Reserve. So here you can see that there was more demand or more need for a trading partner, more uncertainty, and the Fed stepped in a big way during COVID. And that's what this is basically like a bailout for money market funds, saying, don't you worry, we're going to buy all your risky assets. Don't you worry. And it's a lot of liquidity they poured in, right? The Federal Reserve had only been playing in the repo market to the tune of 200 billion, still a lot, but not nearly as much as what it became to. And then it came to do 2.5 trillion in the matter of months during COVID. And now, as you were referring to in this article, they've tried to drain that. And as you see, when they drain that, the M3
blows out.
The repo in the system starts to increase. So extra liquidity, chasing the same amount of assets, relatively speaking, could be fodder for a crisis. And everybody knows that we have people that are willing to act on all sides. We have Trump that wants more lower interest rates and is ready for this money printing. And we have a Fed that, no matter how hawkish they say, they're going to act. If something happens, they're going to act and they're going to print. Bernanke proved that from the global financial crisis. If we had just let this was a big part of the bailouts. It wasn't the only part, because again, this is just the repo market and this is actually non-bank stuff. But if we had just let this completely collapse, and not bailed out the banks and their sister companies, their hedge funds, pension funds, then, whoops, losing my mojo here with this refresh buttons. The point is, if we had let that stuff collapse, we would obviously, like a forest fire, you would be in much better position today if you let all the crazy stuff burn, but we stopped it. We went only back to 2010 levels in the repo market when we probably needed to go back. 2004 levels when we probably needed to go back, to 1990 levels. And we're at all-time highs again. So I don't know if it's answering your question one way or another, but the point is it's going back into the market. It is extra liquidity. Extra liquidity and broad money will have a rise in prices.
And it's very small time scale, but it looks like because of tariffs, Doge, whatever, it's flooding back into treasury markets right now as yields are coming down.
Yeah. This can go all over the place. Doesn't have to be a treasury, actually, that's repoed, but my understanding is that by and large, the majority is. Like there are mortgage-backed securities that were repoed. They have the same credit rating and theoretically the same interest rate as treasuries. So they are part of this as well.
The U.S. housing market is as secure as a U.S. treasury.
Right. That's what they're saying to us, basically. So anyway, man, that's that. That's repos. We did Bitcoin. We did repos. You want to look at a couple different Bitcoin price models?
Yeah.
This one I had ready for you. Now that I wasted a bunch of time finding charts that I couldn't find with Control F. Here's putting two different trends in Bitcoin together. Power and exponential. This is another reason why Bitcoin is not exponential. Just, again, S-curve is another idea, but I don't think that's going to happen either. But if you're just straight up power or straight up exponential, you can draw one of these two lines. Power is a 96% R squared, exponential 86. Exponential, obviously straight line on log scale. It just doesn't fit as well. Early days, and we haven't hit that trend line since 2022. And another thing, look at how fast exponential grows, assuming we have, the same sort of growth that we've had in the past. Exponential growth, even though I actually don't know the slope of this curve off the top of my head, but it's regardless of how it's growing, the trend, it's in dollar terms, is obviously fast. So this is why exponential, another reason why I think exponential is not in Bitcoin, because the curve, or I should say Bitcoin is not exhibiting an exponential growth because the curve, as of right now, this is based on real data, as of March 7th, 2025, power curve, the trend, the price is 89,000. The exponential trend is telling you that Bitcoin should be 400,000. Whereas the power trend is telling you Bitcoin should be 94,000. You tell me which one looks better.
Power trend, but everybody's manipulating the market. It should be on the exponential curve. We're just being price suppressed by the CME. Don't you know that, sir?
Are those other memes that I'm missing right now?
No, I don't. I can hear somebody screaming that in the comment section right now.
Yeah. Look, I'm taking the same amount of data. It's the same Bitcoin pricing data over 5,800 days or whatever it is. You got a power curve, beautifully fits it. You got an exponential curve that's by definition going to be a straight line on log scale. Let's go out to the end of 2025 on this curve. Power is the same trend, 125,000 as we just talked about. Exponential, 770,000. I would love it. I'm not going to complain if Bitcoin goes to 770,000. Question is the question is probabilities, right? It's all about probabilities.
It's a lower probability because it's 86 versus 90. What was it, 97? 96.5?
96 R squared, 96% R squared for power, 86% for exponential.
Yeah.
I got plan Bs here as well. This 2019 stock to flow is here.
God bless them. God bless them.
God bless them. His 2020 is even higher. We're fully off that one. And so let me make this less noisy. The 2020 was all the rage during COVID. You remember the Plan B stock to flow of his 2020 model. Obviously, we never hit that. We're not going to hit it.
Just waiting for one more green dot, you know.
You're not reading this wrong, dear viewer. His 2020 model by now is predicting $5.7 million per Bitcoin. That's his 2020 model.
It's one more green dot.
Right. So then you move back to the 2019 model, which was his first model. This looks better. It's closer. But again, here's my question. Why wouldn't you just use all the data? Why would you just rely on 2019 as a random date? So I have it here. You can do a running stock to flow model as well. Now, I hasten to say to people, I've said this 1,000 times, but we're on a roll here, Marty. Let me know how much time you have, by the way, if we need to cut this.
We got some time.
As in like 5 minutes or 10 minutes?
We got 10 minutes at least.
All right.
Check my calendar. Oh, shit. No. I've got 5 minutes. 10. I've got a 10:30.
All right. 3 minutes. Let's do it. All the dear listeners have been here and my daughter's ready to play anyway. So we can see the divergence of the stock to flow model. When based on his 2019 model, okay, it's this blue line. But if you just use all the data, it will just change the model. It's nothing magical. So you can make a stock to flow model based on all the current data, and it will just make the stock to flow more shallow. So that's the problem. That's why I always would, models are not like something special, but if you can adapt it and look back in time and the model still predicts something valuable, i.e. the power curve, then there could be something to it. So like I said, this green power curve line has basically been the same since the entire time that I've shown this. I know I'm not showing that to you, but the stock to flow you've had to revise many times, and you have to keep revising it down basically as more data is occurred.
I think the conclusion
and it is
is
a power trend.
Why do people get so triggered about the power trend? And Giovanni's obviously a very eccentric character that people. He
gets excited. Yeah, he gets excited. I honestly,
it's just descriptive. Like everybody's like, don't blah blah blah. It's descriptive of what's happened, and you can.
Yeah, I'm not engaged in a lot of the Twitter fights about it, but I've always called it a power curve. I'm not going to call it a power law, and it's just a trend. That's all that it is, my friends. It's a trend line. It updates. Unlike some stock to flow predictions, you can easily just update this every day, and more or less the line stays the same. That should be the lesson of the show here. So from 2016, this line has more or less been exactly the same.
All right,
and so from that,
zoom all the way over to
imagine.
the right. Let's just give people the price prediction I want to see all the way to
the right. All right. So 2025, 125K. Let's go out to the end of the decade, 600K. After the next, two halvings, 700K. And then we have by 2050, $23 million Bitcoin. And again, I hasten to say, I'm not saying I'm predicting this. I'm just saying it's the model. Of course, we know probably by the next two halvings, something significant will happen in the monetary system with Bitcoin, and it'll probably change the game. But that is what the trend tells us. It's adoption. It's adoption. By the way, Plan B, if you want to get back to that, he's saying $851 billion per Bitcoin.
Billion.
By 2050, yeah. So we have 851 billion Plan B 2019 model versus 23 million power curve.
You know what? I'm going to start doing quarterly updates, but Plan B is more bullish.
It's probabilities, my friends. It's probabilities. All right, man. We didn't get to Ukraine. I couldn't piss off over half of your listeners.
Well, we can come back tomorrow and do that if you want to.
No, it's fine. We can do it another time. It's crazy days. Pray for the people in Ukraine. Donate if you can, like I can. There's plenty of, not like I can, like any Bitcoiner can. All sorts of great charities. Blue Yellow is a good one. It's a Baltic one that donates. Anyway, that's all I'll say. Thank you, Marty.
I'm praying for everybody involved. We'll get into it if we. Thank you. We'll be back next quarter, and we'll talk more about that. There's definitely going to be a bunch of shit that's happening between now and then too. So
always a pleasure, never a chore. Thank you, Marty.
Go enjoy your weekend, sir. Peace and love, freaks.
Take care.